All right, hello everyone. Welcome to another episode of the Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's going on, Wale?
Man, just fighting for my life all week. I've been
Man,
tired.
I think you need to go to sleep, man. You need some rest. This has been an interesting week, bro. Like in terms of the stock market, it's been a very interesting week. Um, I see. Oh, Wale, you frozen, bro. You are frozen, my guy. Oh, there you go. Now you back.
Yeah, it says I knew this was gonna happen. I just knew it. I knew it.
I was like, you should go back and watch, man. You frozen with a smile too.
Oh, I'm looking at it now. Yeah,
Yeah.
I was frozen with a smile. Yeah.
But it's crazy, man. It's been an interesting week, man. But overall, the stock market kind of like retreated a little bit today. S&P kind of dropped a little bit, Dow Jones a little bit, the Nasdaq also kind of fell a little bit percent today. So I mean, we see a little bit of pullback, but overall for the week, I think we're kind of sitting at a good number. We haven't really retreated too much. We finished a little high on the week. Um, but overall, man, one of the biggest thing that we always talked about is the labor market. I mean, I know we said this so many times. Those numbers are not adding up. Those numbers are not adding up. Something's not adding up. Because I always like I'll tell you guys, like I always go on LinkedIn. I was going Indeed to go look at the job numbers getting posted there, right? And then Indeed. The cool thing about Indeed, it tells you how many people applied for a job. I'm seeing like a hundred plus people applying for like one job. You know what I mean? And that hasn't been the case in the past. In the past, it's probably like see like maybe 25, maybe 30, maybe, but 100 plus on one job. And some of those jobs are not, I'm looking at jobs that like maybe paying like below 100,000, right? A lot of people are applying for it. So for me, that was kind of like, oh shoot, something's happening. I don't know what it is. But that number was disappointing, man. We only added 22,000 job.
And we talking about the whole country.
The whole freaking country, 22,000 jobs for the month of what is that, June? In
Au-
August
August.
versus the expectation. Guess what? The expectation was 75,000.
And those were pretty low. Those are pretty low. Yeah, we've been
And
go ahead.
it's crazy. And the employment went up to like 4.3%. This has been the highest since 2021. Like you
Hmm.
think about right after COVID, guys, like that's we literally right there. We're back at during COVID time again. So yeah, man. Let me get your reaction on this because this we've been talking about this for a while now.
Yeah, so earlier in the year, we were always talking about how is unemployment at that 4.1, 4.2 like mark, like it hasn't really moved. And now we finally see it at like 4.3. Also, too, I've been hearing that the immigration laws are hurting the supply of people as far as some
Mm,
jobs are concerned. So I've been hearing those issues as well. But we're starting to see unemployment starting to tick up.
yep.
And with that happening, it's almost pretty much locked in that we're going to get a rate cut in September.
Yep.
Last year we saw the same story where the jobs numbers and the unemployment numbers were scared the Fed. And as soon as September came around, they cut. That was September 18th last year when we got
Yep.
that first cut. And that was 50
Yep.
basis points. I would not be surprised that if we get 50 basis points again,
Yep.
I
I
would
won't be
not be
surprised either.
surprised. Yeah.
Yep.
And I
Yep.
think what the Fed is looking at, they're basically looking at the lesser of two evils, right? It's like, okay, we do have some inflation with tariffs, but we
Mhm.
have higher unemployment, which you can't solve both at the same time.
Nope.
So they got to choose one. And I think they're choosing the unemployment, issue rather than the tariff issue, because I think what they're saying is that whatever issues we're seeing with tariffs are just going to be temporary, like, a one-time price hike.
Yeah.
But if you hear what a lot of companies are saying, right? A lot of companies have been trying to eat those tariffs. I mean, look what happened to Lululemon today.
Yo,
Got
like,
smacked. Man,
like,
yeah.
and bro, I was mad because I knew about it and I swung a put, but I didn't look at the implied volatility, so I ain't make nothing. I got IV Christ like
Don't you hate that?
crazy.
Don't you hate
And it
that?
dropped like it dropped like $30. You would think like I was like, whoa, I'm gonna be cashed out. Nope. I woke up very disappointed.
Yeah, Lululemon's getting smacked.
Yep.
I got an email from, not an email, but a text message from one of my boys. He said Sherwin Williams, the paint company, right? They shut down all of their employer match on 401k because of
Hey,
cash flow and tariff issues. I'm hearing that Mercedes is going to start putting BMW engines in their cars because of tariff issues.
hey.
So everybody's trying to navigate all these tariff issues, and it's showing up in some businesses rather
Yep,
more than others, right?
yep,
So,
yep,
but the Fed is betting on trying to solve the unemployment problem rather than trying to solve the tariff problem. Now we get
yep.
CPI and PPI next week. We'll see what those come in at. But yeah, the labor market is really, really, really weak.
We're struggling, man. Because even if you look at the article that came out today, of Salesforce laying off like
Oh yeah.
4,000 people or something like that. It was a crazy number. You know what I mean? I was like, whoa.
Hmm.
Like, so we're dealing with that. We're dealing with the AI potentially taking high paying jobs. So
Hmm.
those guys have to go somewhere and find a job. You know what I
Hmm.
mean? And this is just in one sector. You know, we're not talking about like, the other sectors that's happening. You add tariff issues on top of that. Companies are not cutting corners, but cutting costs. And the first people that always get the first line of cutting costs when things go crazy are
It's
usually
people.
employees.
Yep.
They
Because
cut employees off.
those are the most expensive things in the business is people.
Right. They cut employees off so they're gonna able to like shed some fats and stuff. You know what I mean? But again, tariffs is affecting everybody in every single corner. You know what I mean? Like, so I don't know what's gonna be the long-term effect on this. I really don't know because at the same time you think about the immigration policies too, right? So we have like I was reading today that in Georgia here, like they went and raided a Hyundai plant where they arrested over 100 people that was working there illegally, basically. You know what I mean? So I was
Sheesh.
like, somebody got a tip. Somebody got a tip. They tip somebody.
Sheesh.
So now they're not just waiting for you to be on the street. They go into companies, right, to get people out of there. So again, is that cost cutting? Is that going to affect any employment down the road, or is that another strategy to be able to like, okay, we know we're losing jobs. Maybe we need
Hmm.
to get rid of some of the people that's actually taking those jobs. But I don't know, like you know what I
Yeah.
mean. So long term, I have no idea how this is going to impact any of the economy and stuff. So it's gonna be interesting in the next year or two to see how this is going to actually help out. So it's
Yeah.
been
And
crazy.
the thing we'll have to wait and see is, will the cuts even matter? Right? Like
Exactly,
we might
man.
get rate cuts, and if we continue to keep getting weak job numbers, it's kind of like, what are
We
you gonna
might
do?
we might have to keep cutting again.
Yeah, so I'm pretty sure that rate cut in September is locked in, and then we got October and December. So we'll
Yeah,
see what
yeah.
happens.
I
But
won't be surprised if we get a cut every single time from now all the way to the end of the year, honestly.
and I actually thought that the market would actually hold the gains because I wrote in the group this yesterday. I was like, this might be one of those things where it's, bad news is good news because a weak labor market means that we're probably more likely going to get a cut.
Yeah.
And the market's reaction initially after that announcement was higher. So I was a little bit bullish going into today. And then once I kind of saw Microsoft and Nvidia kind of dragging the market down, I was like, oh yeah, this is about to reverse. And then we
Mm-hmm.
saw that sell off, and then we kind of saw the market kind of trade sideways for the rest of the day. But yeah, we'll see, man. I'm in the Fed's got a tough job because if we get a hot CPI before before the Fed meeting,
Yeah.
I
Yeah.
don't know. I don't know.
And,
We'll see.
and we probably will get a hot CPI. Either hot or it's just gonna be in line. You know what I
In
mean?
line,
But
yeah. Yeah.
yeah, I don't think we're gonna get any lower than that. So it's I don't know, man. We'll see what the rate cut, gonna look like. But yeah, it's gonna be very, very interesting. Let's move on to some earnings, man. I know we mentioned Lululemon. Lululemon dropped like 19%, bro. Like, and I mean it's expected, right? It's like retail tariffs. It makes sense for them to drop. You know what I mean? It's just there was a lot of volatility on those contracts. So if you bought up, you might have to buy like next week or something like that for you to make money. But if you bought like the next day, you definitely make a lot of money.
I was gonna
Um,
say, speaking of retail, now not all retails are struggling. Go look at what happened with American Eagle yesterday.
what's going on, American
Go
Eagle?
check American Eagle stock yesterday.
Don't tell me they're like Abercrombie& French was doing the same move too back in the like last year, I think.
Go check that chart yesterday.
God, nah, that has to be a short squeeze, bro. That's Nah, that's a short squeeze. They're not doing that good.
They went from $13 to $19.
Yeah, that's a short squeeze.
So
Yeah.
all the shorts that were thinking that they were struggling had to come cover, and
Yep.
they were up like almost 30% yesterday.
Yep. That is definitely a short squeeze, man. Because
Yeah.
ain't no way. Speaking of, hold on. Have you seen Spirit Airline? Y'all
Yeah.
go look at Spirit Airline. Look at Spirit Airline, y'all. They filed for bankruptcy. What are they sitting at right now?
Let's see. What's their what safe?
I think it's safe, yeah.
Yeah, I think it's safe. It's not loading on my Thinkorswim. Says
Dang.
they're a dollar eight a share right now.
Man, like they filed for they
Chapter
filed
11.
for Chapter 11, and it's just they got smacked, man. Like,
Yeah. Now what's gonna happen is all the other airlines are just gonna start divvying up their routes.
yep,
Yeah.
yep,
So
yep.
I think
So we shall
Frontier might,
see, man.
yeah, Frontier might be in on the first in line to get those routes, or JetBlue.
JetBlue probably. I mean,
Yeah,
JetBlue was trying to buy them back in the day, and they
I
got
know.
blocked.
They got
So
blocked.
yeah, that probably would have been their saving grace, but now
Yeah.
it'll make no sense anymore. Let's talk about Broadcom, man. Broadcom reported in this surge about 11%. I think they have a strong Q3 results on the back of AI demand, being the AI demands and all this stuff. And they reported about 10 billion OpenAI hardware order. So OpenAI just put in a huge order with them. So let's talk about Broadcom a little bit. I feel like they are, I mean, most of the AI company kind of like, either like retreating like Nvidia, kind of people taking profit, or Broadcom, like Broadcom, they're still kind of like running up and stuff.
Yeah, Broadcom has had a pretty steady climb when it comes to some of the chip sectors. I think Nvidia has been down for the last 4 weeks.
Yep.
If we're looking at the weekly chart of Nvidia, they've had 4 straight weeks of decline. Broadcom, one of the, I would say from a market cap standpoint, one of the chip makers that's at the $1 trillion mark, right? So they're not as valuable as Nvidia. They probably have a little bit more upside. And as far as I'm trying to figure out, do they manufacture their chips or do they deploy that to like TSM? I need to do more research on Broadcom, but they have steadily been climbing. I mean, I go back to
It looks like they're chip designers. I don't think they're
that
makers.
they're not manufacturers. Okay, so if
Yeah.
you look at Broadcom, go back to the low in April was 138. One,
Bro,
two,
go back,
three,
go
four
back, go back to
pops.
2020 and see how much were there. Like this is the crazy part. I think this did they split? I think they split, right?
I think they did do a stock split.
Yeah.
Yeah,
Okay.
they did a stock split. So because that used to be $1,000 stock at one point.
Yeah. Yeah.
Yeah. But they've been the last 6 months, Broadcom has been steadily climbing.
Yeah. I mean, the earnings per share is $1.69. That's 36% year over year. Revenue is like $15.95 billion. That's up 22% of a year over year. That's crazy, man.
Yeah.
The
They're
AI the AI chip segment alone is up 63% year
yeah.
over year.
I
Oh,
I, I think if you're someone, and I don't know if I wouldn't call it too late, but if you're someone who's thinking like, okay, I might have missed the Nvidia run, Broadcom is not a bad second like stock to look at if you want to be
right.
in a semiconductor space. Because right now, the one company that I thought would have a little bit more legs was AMD, but AMD hasn't really figured it out. Broadcom has
Struggling.
figured it out.
It's been struggling.
Broadcom has figured it out. So if I were to kind of rank the chip names as far as like where I would look, Nvidia obviously is top dog. Number two is AVGO for sure. So yeah, I would put them in my on my bucket list as a name to watch. So
Yeah, yeah.
I don't know enough of their business. Like I know Nvidia and like I know AMD and I know some of the other ones. Broadcom is probably one I'll probably put on my list to do some more research on because I think long term I think they've got a good trajectory long term. So I would put that on my list. Now, the only thing I did not like about Broadcom was it hit a high of 356 and then it closed at 334. So
Yeah, it got rejected hard over there.
yeah,
Yeah.
it gave a lot back.
Yep.
And I want to say that this is an all-time high for them too.
Yep. 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 Yep.
So if there's some consolidation or a pullback, I would probably look to make a nice entry. So yeah,
Yeah.
Broadcom is also if I'm not mistaken, they're a US based company.
Hmm.
So they probably taking some of Intel's lunch too.
Yeah. Yeah. I mean, I think the AI the AI story is still getting bigger and bigger. You know what I mean? We talked a lot about that. So it's like now we're starting to see like which ones are coming on top, which ones might necessarily not be like the top dog, but like one of the ones that's like, you know, maybe it's still undervalued. You know what I mean? So people are
Yeah,
pouring money into that. So I think AVGO is probably one of those. AMD, I'm surprised AMD still hasn't been doing
they
a
haven't
lot,
figured it
man.
out.
Like
They haven't figured it out. They haven't
I am
figured it out.
so surprised, man.
Yeah, they haven't
Like,
figured it out. So I mean, we'll see, man. I still think that they've got good leadership, good company, but
mm-hmm.
we got to see if they can give competition to Nvidia because right now I don't really think anybody can give them competition right now. So
Nope, nope. Speaking of Nvidia, man, Nvidia is down to that 50-day moving average. I think they had like 4 days back to back to back just going down.
yeah,
Um, so
four
it
4 weeks,
is it 4 weeks or 4 days?
4 weeks, last 4 weeks they have closed. Yeah, they've closed lower for the last 4 weeks.
Jeez. Oh
Yeah,
yeah. One, two, three, four. Yeah. They just
yeah.
been going down, down, down. So I mean, is this profit taking? Is this more like, you know, investors are like, oh, I don't know what's happening. I mean, couple that with September. I mean, September is, you know, is widely known as the time where people usually mostly take profit. We see some sector rotation also. So,
Yeah.
what are your take on that? Because they've been down like 4 weeks in a row. Yeah.
I think the thing with Nvidia, um, again, still good company, still the top dog in the AI space. I heard that one of the things that they reported was that a lot of their profit or a lot of their revenue per quarter only comes from two customers.
Whew.
Most of their revenue only comes from two customers. I want to say 63% of their quarterly revenue comes from two customers.
Mm-hmm.
So maybe people are seeing that as that, hey, if these two customers start to pull out, that's going to really hurt their
It's gonna hurt
numbers.
them. It's gonna hurt them.
And when you look at it from a valuation standpoint, it's like, okay, am I willing to pay premium valuation for a company that's very concentrated with two customers?
Mm-hmm.
It's a little bit risky. So I can see why people might have been taking some profits from Nvidia based on that. Now, I don't think it said who those customers were, but let me see. Let me go back real quick and see if I can find the article that I read. But yeah, that's not a good thing.
It's definitely not a good thing because, like you said, if any of those customers, even if any of those customers decide to make their own chip, that's a problem. You know, um, we might see some crazy drop on Nvidia on this one. But
Yeah, it says NVIDIA's customers concentration is high and increasing with a recent Q2 2025 earnings showing unnamed direct customers accounting for 39% of record revenue. While this indicates strong demand from major players in the AI data center market, it presents a significant risk. Again, if these large clients, likely OEMs or distributors, are indirect customers like hyperscale cloud providers, where they could reduce spending, it could severely impact NVIDIA's growth and financials. Yeah. So yeah, two mystery customers made up 39% of their revenue in Q2 of 2025. So that's a little risky. That's a little risky. So
that is. I mean, we'll see, man. I feel like they're still kind of like a good company, but like if you have your large concentration of your customer into like two customers,
yeah,
no matter how good of a company you are, like that's a big threat. You know what I mean? Like
correct.
if
Correct.
one of them decide that I don't want to do this anymore, or I'm gonna find it somewhere cheaper and better, they're gone.
Correct.
Yeah,
There you go. Yeah. So we'll see. We'll see. I mean, that's an eye opener for me. I didn't know it was
Mhm.
that concentrated. So
Yeah,
but
yeah.
I was, man, the more I keep like hearing about the AI story, man, there's so many companies that are like players in just how everything is connected. It's like a web.
Yep.
Like there's
Yep.
so many companies. So I don't know. Maybe one of these days, I'm just gonna sit there and just be like, okay, what is needed in the construction of a data center, right? Like, what are all the components needed in the? I mean, obviously, you need chips, you need networking, you need servers, you need cooling,
Yep.
you need the infrastructure. But there's so many other things I keep hearing. I'm just like, I hear about companies that are like in the data center space. They're talking about, oh, our data center revenue increased. I'm like, okay, what do they do?
What did they do? Yeah.
Yeah. So, now on top of that, the one thing that we all know that's needed is power, which is why I kind of went with power because that's like an obvious
Mm, mm.
thing. You can't run a data center without power.
Yep. Yep.
So, but yeah, there's just so many different components of the AI story outside of just chips. And yeah, I need to look at the company that reported this week that was talking about that. But if I can find it, I'll let you know. But yeah, man, I still like Nvidia, but I'm going to start doing a little bit more research on AVGO and just
Yep.
kind of figuring out, okay, is this in more of it? Because they're a $1 trillion company, right? So they've got some room to grow. Like if they get from 1 trillion to 2 trillion, that's
That's
not a
not a
bad
bad. Yeah.
investment. That's not a bad
Exactly.
investment. Yeah. So yeah, I gotta look more into AVGO because I personally don't know much about their business. I just know that they're a chip. They
Chip.
play in that semiconductor
Yep.
space, but I
Yep.
just don't know how and what their specialty is.
Man, yeah, that'll be an interesting company to kind of break down it. Not just AVGO, but it's like the entire AI
Correct.
ecosystem. You know what I mean? I
Yeah.
know we talked a lot about different components that goes in there, but it's like understanding like if we just take the data centers, what's going on in the data centers and all these different things. I mean, those things are huge, man. Like if you drove
Oh
by
yeah.
one of them, they're huge, and
Huge.
they're not like a football stadium. They're way, way, way bigger. You know what I
Way
mean?
bigger than that. Yeah.
And all it holds is literally servers, and it's just crazy. It's just crazy. Yeah. But let's move on to Google, man. I mean, Google got a good news. They don't have to sell Chrome. And I mean, the stock just shot the heck up from there. You know what I mean? It's like it lifted the whole market today and the past couple of days also. But yeah, Google went from 211 all the way to 235, the highest today, like in 3 days, you know?
Crazy.
Um, I mean, I'm glad they don't have to sell it, but it's like I don't know why did they think like they were monopolizing like the search engine. It's like we have ChatGPT now. A lot of people not depending on like ChatGPT or Gemini or any of those stuff. So I don't
So
see
I,
the
I
I don't see
actually
the need for that anyway.
I actually think that Open AI might have saved Google.
Really? Oh, that's true. That's true.
Because now that we have all of these different ways where you can search for information, you
Mm-hmm.
can't call it a monopoly,
Right. Right.
right? So um I think that the emergence of open AI and all of these other like Gemini and who's the other one that they Copilot and all that stuff.
Copilot. Yeah.
I think that clearly shows that they don't have a monopoly anymore.
Right. Right. And it
So
kind of
they
helped
I
them a
think
little bit too.
yeah, I think they got lucky.
Yeah.
I think they got lucky.
Because I remember they were talking about it like a year or two ago, where
Hmm.
they kind of had an issue with Apple, where Apple was like using Chrome as their main search engine on the phone. So it's
Yep.
like you just automatically just use Chrome when you in
Safari.
Apple
Yep.
Safari. So it's like um I don't that I guess either Google was paying Apple like crazy amount of money,
Yeah, crazy amount of money.
like
Because
10 billion.
Apple
It was
actually went
crazy.
up too.
Yep.
Apple actually went up after the report too. Yeah.
Yep. Yep. So those two hand in hand, man, is like, I guess it's good news for both. So Apple get to keep the amount of users that keep using their system because and then Google get to make a few $1 billion a year and chill with that. So that's not a bad deal. Not a bad
Yeah.
deal at all. Um, so Fridays, we do financial Fridays on Fridays. So let's go on to today's topic. And I know you want to cover how to pick the best stocks in different sectors. So let's go ahead and jump into that. And I hand you over to you.
All right. So I don't have a PowerPoint prepared for this one, but I'm just going to talk. It's a pretty easy process
Mhm.
where it's kind of like, um, let's say you've got and I always want to make this assumption when you're starting to invest, like I would probably say your first 5 to 10, maybe even 20,000 should go into like an ETF or a diversified fund, like a, QQQ, SPY. You want to be diversified first. Then when you get to the point where you're actually comfortable owning individual positions and doing research on individual positions, it's kind of like, okay, let's just say you want to be in the semiconductor space. And you're like, I want to find the top semiconductor companies that I can invest in, but I don't know where to start. So let me walk you through a process that you can go through, right? ChatGPT, Copilot, they can help you with this process to kind of help you narrow things down. So the first thing you want to do is you want to find thematic mutual funds or ETFs that are concentrated in that sector, right? So you can ask ChatGPT, give me a list of the top mutual funds or the top ETFs in the semiconductor sector. And then I would rank it by AUM. And the reason why AUM is important is because liquidity is important. You want to, especially for ETFs, you want to buy something that's very liquid, that doesn't have very wide bid-ask spreads. So I would start there. It will give you a list of those names, right? Of different funds, mutual funds, and ETFs that are concentrated in the semiconductor space. And you can ask it to list it by assets under management. Usually, if it's over $1 billion in assets under management, that's pretty good. Anything under a billion is still fine. Anything under 500 million, I'd be a little bit skeptical. When you look at those funds, then I would start to narrow things down and say, okay, give me a list of the funds that have beat the index. Probably use QQQ or SPY. I probably use QQQ because semiconductors is technology. Give me the list of funds that have outperformed QQQ over the last 5 years. And if you want to even go longer, some may not have 10 years worth of data, but maybe 10 years. But 5 is probably a good place to start. Maybe you even go down to 3. And then that will narrow your search from there, right? So now you have funds that have good size, good liquidity, and now you've narrowed it down to funds that have outperformed the index. Now, when you know a fund has outperformed the index, in most cases, it is usually the top 10 positions that are responsible for that. In most cases, some of these
Mhm.
funds might have hundreds of positions or dozens of positions, but in most cases,
It's the
the
top 10.
performance is usually the top 10 funds.
Yep.
So from there, that's when I'll make a list. Maybe you make a list of maybe 5 to 10 funds, and then you start looking at their top 10 holdings and you look for consistent names. Once you start seeing consistent names,
Yep.
that will tell you who are the top players or the best performers
Yep.
in that sector. So if you go to a semiconductor fund, right? Whether it's, I got a list in front of me right now, SOX, SOXX, SMH, X8, XSD, right? There's another one, Semi, SOXQ. There's tons of funds out there, right? And
Mhm.
it's usually good to go with names that you can recognize. So the big players in the space, iShares, Invesco, who else is in there? VanEck, Spider. So there's different fund companies that will have, um, sectors thematic, uh, funds. So once you start seeing the names that just keep showing up in the top 10, that will let you know, okay, these are the players that I should be paying attention to. And I'm
Yep.
pretty sure if you go to most of these funds, in the top 10, you'll probably see TSM, you're going to see NVIDIA, you're probably going to see Broadcom, and you're probably going to, who's a fourth one I'd probably throw in there? You might see some AMD in there. MU might also be in there. So
MU.
that will give you some names that you should be paying attention to. And then once you start to, make a list of these names, maybe you come up with like 5 to 10 names, then you can start doing your research and go
Mhm.
from there. So that's the process I would go for if you're saying, let me find the top players in this sector. You can do the same thing with cybersecurity. You can
Yep.
do it with financials, any sector out there That's the process you should follow. And once you start seeing consistent names, then you make your list, you do your research, and then you can start buying
Yep.
individual positions that you believe in.
Yep.
Because to me, the way I look at it is if you're a top 10 company in 5 or 6 or $7 billion funds, you're a strong company,
You're a
right?
strong
That
company.
means
Yep.
the research done by those fund companies, they believe in your stock.
Yep.
And to me, 5, 6, 7, 8 different fund companies that have the same name in them, they all can't be wrong. Like they all can't be wrong.
Mm-hmm.
And you
Mm-hmm.
can also start looking at these fund companies and seeing, okay, has this position grown over the last 5 years, or have they been trimming this position over the last 5 years? Those things you can also look, you can look at like Morningstar, and you can also do some research on that. So if companies have been adding to these names over the last couple of years, it's a good sign that they're probably very bullish on that company. So
Yep. Yep.
that is the process.
No, I mean, like I think I heard this back in 2020 where somebody's like some of those ETFs or or those big giants investment firms, they do the research for you. All you gotta do is just follow it. You know what I mean? They spend hundreds of thousands, sometimes millions of dollars on analysts to go through and figure out
Correct.
which stocks
Exactly.
are should be in the top 10 and which one should like so you just gotta follow them. You
You
know
just
what I
got to
mean?
follow. You just got to follow the money. And this is why I
Mhm.
said if you find the funds that have consistently beat the index over a five, now don't look at a 1 year period because sometimes you can just get lucky, aka
Right,
Kathy
right.
Wood, right?
Yeah. Whew.
You want to find the funds and the mutual funds and the ETFs that have beat the index or have beat their benchmark on a consistent basis. So 5 years is usually a good place to start. 3 years might be a little bit dicey, but 5 years is a good place to start.
Yep.
And if that fund company or that fund has consistently beat the index, that tells you that usually their top 10 picks are the drivers of that performance.
Yep.
So that's, again, you don't really got to dig in too much into the weeds. Just got
Yep.
to, just peel the onion after what the analysts have already done and then go from there.
Just go from there. Yeah.
Go from there. Yeah.
But yeah, that's a good tip, man. I mean, it saves you a lot of time. You don't have
Yep.
to go do too many research and stuff. And then,
Yeah.
it frees you also to start looking at other ones that you can kind of like want to do more deep dive into it, right? So it's like
Correct.
get you your foundation, right? Like the ones that like, are good stock that, that analysts have done research on. And then, it gives you time to go but be able to find those individual ones that you want to find on your own. But yeah,
Exactly.
man, it's a good
And I always
breakdown.
tell people when you get to the point where you start buying individual positions, I always want to stress this out. Make sure that you stay in tune to what's going on to the business.
Yes.
Make sure you
Yes.
understand what's going on with the business. Because if you're not, I mean, we've gone through so many names of stocks that if you bought 10 years ago, you ain't made no money. Because if you don't listen to the earnings call, you don't listen to what the CEO or the CFO is saying about the business, you're not going to pick up on things where you're saying, okay, maybe this is a stock I need to cut off and
Right.
move on to a different stock, right? So you just got to be real, real, real careful of that. Where again, think of yourself as a business owner when you own shares of a company. I am a business owner. As a business owner, I need to be in tune to what's going on with the company,
Yep.
right? And like I said, in today's day and age, right? I remember 5, 6, 7 years ago, you really had to really be on the earnings calls. Now you can just go into Chat GPT and say, okay,
Yep.
they usually would after 2 or 3 days, their investor relations, department will put a overview of the last earnings report. All you got to do is go into Chat GPT and say, okay, give me an overview of what happened in the last earnings report.
Yep. Yep.
How did revenue grow? How did EPS do? What are the red flags? And it will give you a breakdown of
Yep.
everything. So
And if you give it the right prompt, you don't even have to ask EPS. You can just tailor this earnings to an investor who is interested in the company. What numbers it's in.
correct. What
It
number should I
literally,
be paying attention
yeah,
to?
it will literally drop that for you. I
It'll drop it
mean,
for you.
I'm telling you, AI has made things so much easier for us.
So much easier.
Like you don't have to go to like different websites now. Like, I mean, Morningstar is great. What's the
Yep,
other ones?
Morningstar is great. Yep. Yep, Morningstar is great.
Fidelity and all those different other ones. They're really good, right? But it's like ChatGPT can literally just take all that stuff for you, analyze it, and you can kind of see it in one place as opposed to
Yeah,
jumping around. Um,
exactly.
but yeah, man, that's a good breakdown. The other thing I would say is like, even with like selecting different stocks from different ETFs or looking at different ETFs is just pay attention to the time that we're in. It's like the cycles that we're in. Whether like we're moving into a time now where Fed is going to be cutting rates. Like, okay, what stocks should you be looking in? What sectors are going to do better in these times? You know what I mean? So you start thinking about those things. And like I said, ChatGPT, man, go ask a question. It will give you all that stuff for you. So
yeah,
you got to worry about it.
you can ask ChatGPT and say historically during rate cutting cycles, which sectors of the market tend to do very,
Yep.
very well.
Yep.
It'll start giving you a breakdown because I think we're gonna get to a point where we're I wouldn't maybe not a rate cut cycle, but we're gonna get to a point where we're gonna start seeing rate cuts at this point because of the
Yep.
weak job numbers. I think most people can say that with the utmost confidence.
Yep. Yep.
We'll have to just wait and see how much of a cut we get, but you know, for bond investors, right? So people who buy bonds, this is probably a time of the year where they're probably extending duration because again, bonds do poorly from a price standpoint when rates are going up. Now that rates are going down, if I'm a bond investor, it's kind of like maybe I want to lock in a little bit more yield. Maybe I want to take a little bit more risk on the yield curve, right? And those are the things that bond investors would be doing right now. So
Yep.
you can see when rates came down today. You see what happened with TLT. TLT made a really big move today.
Yep. Yep. Even IWM. Look at IWM also.
Yeah, IWM. So everybody's
Yep.
kind of getting on board, thinking, okay, we're going to start getting rate cuts.
Mhm.
Now, again, you still have to understand. We hope that rate cuts will solve the problem because we don't
Right.
know yet.
Right.
We might get a few cuts and then we still see weak job numbers, and it's kind of like, ugh. So we might need more cuts. But then if we see more cuts and then we also see inflation,
it's another problem.
It's going to be push and pull on both sides. So we'll have to wait and see how the Fed navigates this, man. But they got a tough job right now.
They do have a tough job. One of the interesting things that I saw today is did you see the White House dinner and who was in there?
I saw a Bloomberg. I think I saw what you
Bro.
posted, but I didn't see the whole video.
Bro, so Mark Zuckerberg was there, Tim Cook was there, Bill Gates, Sam Altman, Sundar Pichai, I think he's a Google CEO, Satya Nadella, he was there, the Microsoft guy. Sergey was there, who's a co-founder of Google. Like all of these guys and more. I mean, Elon decided not to show up, even though they invited him. He's like, I ain't coming. he's still beefing with Trump. But bro, like that, like damn, those are like almost the same people who attended the inauguration and all that stuff. It's like
all those guys know what they gotta kiss the ring, right?
Yeah.
They all know they gotta kiss the ring now.
Mark is out here cheesing. I mean, some of these guys were like not even 2 years ago, they were all Democrats. And now look at them.
Everybody has a price. Everybody has a price. And the way I look at it is they know that their business could be in jeopardy. So it's kind of like, okay, I don't want to start beef with the person that could hurt my business.
Yep. So Mark Zuckerberg said they're spending like $600 billion or something like that, investing in the US to kind of like, pump the economy and stuff. Tim Cook also said the same thing. I think Sam Altman said the same thing. Google said they're investing like I think it was like 100 billion or something like that a year. It's crazy. Like these guys are just throwing the B words, like they're just like billions. You know what I mean?
But the way I see it though, I think if we look, we let's just say we move 10 years from now, we look back and see, did they really do it? I'd probably say the answer is no.
No.
I think right now all they're trying to do is like we just got to hold off and just get through this administration. We got to do what we need to do just to butter up this administration, make these promises and show them that we're making an effort. And then after the turnover is done, then I think that's what it is. I don't think that they're genuinely really gonna put up that type of money. Maybe I'm wrong. I don't know. But the way I see it is, they're just kind of like, we just got to do what we need to do to survive this, right?
Right.
Because you talk about making a complete 180, I was just kind of like, dang.
Yeah, so. and for me, like these are all tech companies too.
Mm-hmm.
You understand what I'm saying? Those are the same companies that were laying people off.
Yeah.
So how are you bringing jobs in? Like it's like just take politics aside, take everything aside. Like just look at the facts that's happening right now. It's like how many people that that Facebook laid off or Google or Microsoft, I mean, how many more they're gonna lay off once they actually accelerate this whole AI and be able to replace people? Like what jobs are you bringing in? I'm that's the part that I don't understand. Yeah, you're spending $600 billion, but it's like, what exactly are you doing with that 600 billion? You can just be throwing these numbers out. You know what I mean? It's
That's what
like,
I'm saying. I think they just throwing numbers out. That's what I think. That's what I
uh,
think. So, well,
that's
because
ridiculous,
at the end
man.
of the day, who's going to fact check them, right? Who's going to really fact check them?
Yeah,
Nobody. They're
yeah.
private business.
Well, where's our money going? I have some ideas, but I ain't gonna say
Yeah.
it. I got some ideas. I ain't gonna say it on here.
Yeah. We'll see. We'll see, man. I kind of. I mean, to me, I just think that they're just being real strategic, just to make sure that the cash cow continues to print. Right.
Mhm,
We
mhm.
don't want any interruptions in our business. We don't want to start no beef with nobody. We just want to go about our business and do what we do. And
Pretty
if
much.
if that means we got to, kiss some, what, they gonna do it.
They're
So,
doing it, and they're making it rain out there too. So
oh yeah, oh yeah,
yeah. But anyways, man, next week we have some economic calendar. Next week we have Monday we have the survey of consumer expectations. Is this a gate of inflation on spending sentiments from a household? So we'll see what that looks like. I don't know how much is that going to move the market, but we'll see. But the big ones that we are waiting for is Wednesday, September 10th. We had the PPI, which is the Producer Price Index. It measures the wholesale inflation. So it will give us an early indicator, for consumer prices if we're going to pay more on our stuff that we buy from the stores. And then we have CPI, which is Consumer Price Index. That's a direct read on monthly inflation trends. So we'll see. We'll see how that number looks like, because that's gonna be a crazy number that's gonna impact people. You know what I mean? So we shall see that. And then we have Friday, we have GDP advanced report. That's an early read to US economic growth of Q3. And then we have another consumer price CPI release. Um, Probably likely going to be a revision or something like that, but it's not going to be something big. That's on Friday, September 12th.
yeah. So we get PPI on the 10th, and then
And
we get
CPI.
and then CPI on the 11th.
Yep.
So now
So
they're doing PPI first this time around. I don't know why they're not consistent with that.
I mean, I think they always do it. Man, it's strategic. They always hide stuff. They'll give you the crazy number, and then they give you even crazier number afterwards. So we'll see.
But sometimes we get CPI first, then PPI, but now we're getting
Yep.
PPI first and then CPI later. Like what the?
Actually, it looks like PPI and CPI. Are you sure it's on 11? It's showing like it's on the same day.
Nah, it's the 10th and the 11th. That's what I have on my calendar. PPI is on September 10th, and then CPI is on September
Oh,
11th.
okay. I see. Yep, yep.
Yeah,
So that's gonna be interesting. We'll see. That number is very, very important. Actually, going into like closer to rate cuts and all that stuff. We'll see if that's gonna sway the Fed to, instead of 25 basis, they go to 50. So we shall see.
yeah. I
But yeah.
think I think we might get 50.
hmm But other
Yeah,
than that, man, I mean, this whole month, like any like good tips going into this whole month, because I think we're starting to see some stock kind of retreat a little bit. I feel like we are back into that area where it's like we might start to see some good opportunities here and there, but we also got to take into consideration the rate cuts. We got to take consideration inflation on top of that. So it's like the
yeah,
inflation, the word started to come back a little bit. So
yeah. I think from people, I keep hearing the seasonality factor of how September is usually a weak market month, right? It's usually the worst month of the year for lots for whatever reason. So,
yep.
for me, I think this week I haven't really been trading a lot. But if we see any major pullbacks in the market, you just gotta put on your shopping hat, right? And start looking to buy stocks, right? So I think that that's what I would be paying attention to, because there's some names out there that I've missed out on that I'm gonna add Broadcom on my list to kind of do some more research and say, okay, if
hmm
Broadcom starts to move lower, it's just gonna be a name that I want to pick up. CrowdStrike is another one that I've been looking at because, oh man, you talk about missing an epic run. There's another company that reported this week that I need to do more research on. IoT.
IoT. Okay.
They're called Samsara, and they
Oh,
basically
Samsara. Yeah, 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 yeah,
Samsara.
yeah,
Yeah,
yeah.
yeah.
I,
So
th- I
I'm
think they do
here.
with trucking, right? That had something to do with trucking, I think.
Yeah, it says Samsara provides an Internet of Things platform to help organizations connect their physical operations to the cloud for real-time visibility, analytics, and automation.
Okay.
And so, they do like dash cams, driver
Yeah,
behavior
I was gonna say
analytics.
they
Yeah,
do dash cam for trucks and stuff. That's how they started actually. They started doing stuff for trucking for the trucking industry. But
yeah.
it looks like they kind of pivoted a little bit now.
GPS tracking. So the
Yep.
one thing that I heard from them is that they convert raw sensor data into insights through AI reporting and dashboards. And from what I heard, I think they're starting to play in the data center space. So I need to do some research on that
They're pivoting definitely. Look at the 3 months and the 6 months, man. It looks yeah, this shit's about to take
because
off.
this was a stock that was trading at $61 back in February, dropped all the way down to about 30 and is now trading around 40. So now
When are
I'm
they
looking.
reporting? Let me
They
see.
reported yesterday. They reported
Oh, they
already.
reported already. Okay.
Yeah, the stock made a real big move today at 17%.
Yeah.
So
Sheesh.
I need to do some more research on them. So I would their symbol is IoT, Internet of Things, I guess. Is that what it stands for?
Mm.
So yeah,
Yeah, they
yeah,
ran today.
I need to do some research on this company and see if this is one that I need to put in my back pocket.
Yeah, I like that 6 month and 3 months chart candles. They're hammering. So
Mm,
okay. Yeah,
yeah,
definitely gotta put that on the list.
yeah, put that on the list. When you come back 6 months and that stock's trading at 60, remember where you heard it first.
Remember where you heard it first. All right, man. With that being said, any last minute words, man, before we wrap up and go for the weekend?
Nah, that's it for me, man. I think that's it. We've now entered the best part of the year with football season starting this week. So,
Yeah, yeah. Hey, if you're a Cowboy fan, I am sorry.
hey, that's
Like,
CeeDee Lamb fault, man.
I
He had too many crucial drops yesterday.
man, yeah,
Dak,
I give that game away.
yeah, Dak played pretty good. Defense played pretty good in the second half. CeeDee Lamb, you got to make those catches. That's why
You
they
gotta
pay you
make
the
it.
big bucks, man.
You gotta make them.
Got
You
to
gotta
make
make
those
them.
catches. Got to make those catches. Yeah,
He'll get better with time, but we'll
yeah.
see.
We'll see.
Cowboys, I don't know.
Who's your team?
Eagles, man. I gotta go with the
Okay,
Eagles, bro.
okay,
I gotta go with
yeah.
the Eagles.
I'm a Raider fan, unfortunately. So it's gonna be another long year, man.
Yeah, I got a couple more years. Well, not even a couple more. You got a few decades before
Yeah, don't even get me started. I'm in an abusive relationship with the Las Vegas Raiders.
Man, this remind me of me. And I love the Bears. I'm still with the Bears. I thought this year or last year. I thought last year was gonna be good because they got a new quarterback. He was really good.
Yeah, he
Yeah,
was good in college. I think now with Caleb, he needs to learn how to play at the speed of the NFL. So we'll
man.
see
He
if the
needs he
new
needs to he
coach
needs to
helps.
wake up. He needs to
Yeah,
wake up. That's what he
stop
needs to do.
stop painting his nails.
Just wake up, dude. Like, oh man. But anyways, y'all, thank you for tuning in to the Wall Street Rundown, man. We covered a lot of stuff today. Like a lot of stuff. So if you found this today's episode helpful, please don't forget to follow and share this podcast and this show with friends. Anybody who's trying to build their wealth, who's trying to get into the stock market, please go ahead and share this with them and comments and send us any insight, any notes, any comments that you guys want us to jump on, or if you guys have any questions, please make sure you guys send us those. But with that being said, yeah, have a good weekend. Stay safe out there. If you're going out, stay safe. If not, stay inside, do some research, or get your brain together.